Lucid Motors is back in the news and it's making moves, which is causing CCIV stock to pop because of it. But should we even be considering buying Lucid through CCIV when you got Elon here with Tesla? Would it be better to go all in with Tesla stock and the Techno King here? That's what we're going to talk about in this video. We're going to go over what's happening with CCIV and Lucid Motors and compare it to Tesla and its stock price to see where we should be putting our money. And even if you're not invested in either of these stocks and you're not interested in investing in them, there are still some important lessons from this story that we could use to make money in the future. This is a really good example of how the market actually works. If you're not familiar with Lucid, it is an electric vehicle maker. And you could just tell by this, it's supposed to be a fancier version of a Tesla, basically, like a luxury version. And you already know that Teslas are pretty expensive, so this is saying something here. See, these are the type of clothes that you could be wearing if you were driving a Lucid. It is that level of luxury. All gold. Gold in the middle of a desert. It's what everyone wants. You can see the car does look pretty cool, and it does look very similar to a Tesla, but the inside definitely looks a bit nicer. So these cars are called the Lucid Airs, and there's different versions going all the way up to $131,000. And I'm pretty sure this is just the base model, so you could add more to it. And then the low end is not so low at almost $70,000. So the company has a bunch of former executives from Tesla, and they pretty much have the same game plan as Tesla too. They're going to start with releasing these super high-end bougie cars and then work their way downstream in the market. Basically sell the super expensive cars and then use that money to keep funding development to keep moving down the market. So eventually you have a car that anyone can buy. It's the same thing Tesla did. They started with their Roadster and now they're all the way down to the Model 3. So high end down to affordable. Now Lucid here is not a public company, but they are planning to be taken public through a SPAC. And that's where this CCIV comes in, Churchill Capital Corp. So this was the SPAC that was created to take Lucid public. And you can see the excitement before the deal is even done. It's still not done, but you can see how the stock price ran of this SPAC. That's an over 500% run in just a few months. You could even say 1 month. So of course there is a lot of hype around this stock. And the whole reason it's back in the news and you're seeing this little pop right here is because the Lucid Motors CEO, he was doing an interview with Jim Cramer. Now obviously any interview that a CEO does on CNBC, whether it's with Cramer or on the morning show, it doesn't really matter. It's all BS most of the time because they're just pumping their stock, right? You don't get actual real information. But at the same time, Lucid is not public and it's so early stage that investors are hanging on to anything they can get a hold of information wise, which is why they were so excited about this interview. So the fact that they're hanging on to things like that tells you how early stage this really is. It's basically like a moonshot. So it seems like there's a low probability of it working out and becoming the next Tesla, which is what Jim Cramer said he thinks it will be. And what you got to expect is a lot of volatility along the way. And remember, Tesla and Ford are the only car manufacturers that have not gone bankrupt. And it is very, very difficult to even create a car company and actually do manufacturing. You saw Elon, the biggest genius of our time, he had a tough time with it. They're still having a tough time with it. And Lucid isn't exempt from that. You can see here, Lucid has already delayed deliveries of its flagship Lucid Air luxury sedan. So they moved it from spring to the second half of 2021. So the CEO, Peter Rawlinson, he said they did it because the former CEO of Ford, Alan Mulally, who is actually a great operator. He's the one who saved Ford from bankruptcy in 2008. He's actually on Churchill Capital's operating team, which is pretty cool because in addition to having all the ex-Tesla executives in Lucid Motors, in Churchill itself, you got Alan Mulally. So he's the one who told Rawlinson to take that extra time to nail the product's quality. So the delay might be good in the future, but Lucid has made no deliveries so far, and they don't have any revenue. So again, extremely early stage, which is why it's extremely volatile. So they're forecasting vehicle deliveries of approximately 20,000 in 2022, which should generate over 2.2 billion in sales. But like we said, it's not going to be easy. So in addition to actually starting the production of the car, it needs to ramp up its manufacturing operations to actually execute on its growth forecast. The good news is that the company is already laying the literal groundwork, recently securing approval for the second phase of its factory in Arizona from the local zoning commission. So the first phase, which is already complete, should have production capacity around 34,000 units per year. And the second phase should push that to 90,000, which is how many vehicles they hope to deliver in 2024, which would generate $9.9 billion of revenue. Again, this is all projecting into the future. Nothing has happened yet. And they got a very expensive vehicle, right? This is $170,000, and we showed even the base model is $70,000. Not cheap, so they really got to validate their bold technological claims. Say they have over 500 miles of range, the ability to charge 300 miles in 20 minutes with DC fast charging, and industry-leading efficiency that tops even Tesla with real-world data and experience. These are A lot of claims. Now, if they can do all this, they pave the way for a lot of future growth opportunities, such as stationary storage and becoming an EV tech supplier to other industries like aviation or agriculture, which of course is all possible, but will it happen? You know, it's not going to be easy. So I keep stressing that nothing has happened yet. No production has happened, no deliveries, because what does this sound like? It's pure speculation if you're trying to invest in this company. Everything is pretty much up in the air. But what do we know about markets? We know that sentiment moves markets more than anything. It's not numbers. None of these numbers even matter. It's the narrative around the stock and how investors are feeling about it. That's what matters. I know it's crazy to say because you would think, okay, we could do all this analysis. Everyone is analyzing stocks, doing discounted cash flow models. You could do all the modeling in the world, but I'm telling you, the stock market comes down to emotions. And you can talk about that in a few different ways, right? Your own emotions that you're trying to control when you're executing your strategy, and then think about every individual trader or investor doing that. That's what creates the market. And I'll tell you right now, 99% of investors fail because they can't control their emotions, and that's what you see in these stock prices. That's why you saw this crazy price movement in CCIV when nothing really happened. Just a lot of talking. But people love the story, so you could see moves like this. And in general, the narrative around electric vehicle stocks has been so hot, right? Which is why we saw this SPAC take off, we saw NIO take off so many times. It all gets grouped together in one narrative. And that's the thing to understand about markets. They are driven by sentiment and narrative. So knowing that, then what about Tesla? We got the techno king Elon Musk here doing all sorts of crazy stuff, selling his own NFTs of his own music, while driving forward Tesla and other things such as Dogecoin. Well, if we think about Tesla, they've already done everything that Lucid is planning to do. They started with the Roadster, the very high-end model, and then worked their way down. It's taken years, and Elon has pretty much gone through hell. How hard was it to get that manufacturing process right? I'm pretty sure Alan Mulally was on the board of directors for Tesla. I don't know if he's still there and if there's a conflict of interest now, but it's very similar. And again, Lucid Motors are those ex-Tesla executives too. So if we look at Tesla, obviously it's a much surer bet than something like Lucid Motors, because having that manufacturing and a real car that works, that is getting delivered to people that are using it, that's a huge, huge step. And it's not like the price run in Tesla has been anything to disregard. It's been ridiculous, right? So which company should you be investing in? Well, here's what I would say. Lucid Motors right here through CCIV, this is a good vehicle to trade. And I say that because it's so early stage and it is so volatile. Now look what happened. This thing ran up how much? Over 500% in just over a month, right? But then what happened? It collapsed almost 70%. And this is just in the first few months of it even being on the market. Super volatility. And now you see it's recovering a bit. So something like this that is so shaky and so early stage, I don't see why you would invest in it. I think the better option is to trade it. Get in and out, because there are going to be huge swings because it's so volatile, and volatility is great for traders. So right now it looks like an upswing is happening. From the lows right here, CCIV is up over 40%. So actually you may have an opportunity to buy right here in a safe area next to this 50-day moving average. So you can see here, this provided some great support during this massive crash. It dropped a little bit below, but you know, it stayed right around here. And now we're seeing it wrestle to go above this level, because the way these moving averages work is that they act as a support on the downside, but then a resistance on the upside. Now, yes, it has broken through, but you can see that it's struggling a little bit around this area. But this gives you a low risk entry point. So you could put a position right here, and if it breaks below this again, you could get out. And that way you're only taking a small loss. So getting in here, if the hype is real, we could see it run back up to highs. Why not? There's no real numbers for this stock. It's mostly sentiment fueled. It's all about feelings. So it's definitely a better trading vehicle. Now, if we compare that to Tesla here, and we know where they are in their business cycle, this would be more of an investment. Now, again, I personally always like to trade around a position. I'm not just buy and hold. But if you were to choose in between the two, definitely Tesla is the better option. Though you can see right here, the price is pretty much in no man's land. And we've been tracking this for a while because we have a position in Tesla that we're holding right now in our Fallible portfolio. So we've been holding for over a year now on this huge, huge run up. And where things were getting shaky was up here when the stock started going sideways, and we were waiting to see whether it would break higher or lower. And sure enough, it broke lower. And then there was another mini consolidation that formed right here, and it broke lower yet again. Now it's recovering a bit, but see what's happening. It's going sideways once again. And right now the stock is trapped in this area between the 50-day moving average and the 200-day moving average down here. So you don't actually know where it's going to go. So this could be a good entry point. You could be getting it for cheap, or it could fall a lot more. There's no telling at this point because there's not even a pattern here to see. This thing is all over the place. So if you didn't have a position in it, what you would do is kind of just wait. Or if you wanted to add to your position, again, wait. This is the benefit of technical analysis. It's not some voodoo magic. It's just seeing supply and demand in real time. And based off the patterns that form, you can know when to get in or get out safely. You can apply that risk management with technical analysis. But again, there is really nothing going on here. Maybe there's a little pattern forming right here, but even this is pretty much a stretch. You still got to see what's going to happen because it's so short term. Now, as I said before, we're invested in Tesla through the Fallible portfolio, but something really interesting is happening. So our strategy works by investing in the top 5 highest momentum stocks in the NASDAQ. You can see we have this TSI scanner right here that ranks every stock in the NASDAQ by their momentum. Now, here's the interesting part. Tesla, you can see, is now number 11 on this list. And this is surprising to see because Tesla for the last year has been number 1. It's just held that top spot, which makes sense because, I mean, look at this run, right? But lately it's been dropping lower and lower. And in our strategy, we don't buy and hold, we do actively trade. So the times when we sell a stock are when a stock hits a target so that we're taking profits, or it hits a stop, meaning that it didn't go the way that we wanted and we're managing our risk, so we sell it. But there is also another way that our strategy and system will exit a stock, and that's when the momentum falls too low. So our rule for our system is if a stock falls below the top 10 in this TSI list, meaning the top 10 highest momentum stocks, we will rotate out of that stock. But our rotations only happen once a month. So on April 1st, if Tesla is 11 or lower, if it's not in this top 10 right here, we will finally be exiting Tesla after over a year of holding it. And for us, it was a little tricky with Tesla because it's such an outlier stock and it took off so high. Our risk point right now is down at the 200 level, and Tesla is trading at almost $700. So I mean, what kind of risk point is that, right? But that's why we have this other parameter where if the momentum falls enough, then we're going to exit that way. Now, I bring that up because Tesla is really a leader in the market. It's been driving the stock market higher for a long time now. And especially in EVs, electric vehicles, of course, it's the main bellwether, right? So if it's losing momentum like this, is that kind of a signal that sentiment for EVs are dying out too? That's really the signal that we're getting. And of course, there are general market things at play here too. As we've talked about in our previous videos, bonds will just not stop falling. And every time the bonds fall, interest rates go up, which is having a really rough effect on tech stocks especially, which is why you're seeing all this volatility. NASDAQ is looking rough. And one of the most volatile sectors in this whole tech grouping are these EV stocks, especially if you're trying to trade something like Lucid Air, which has, you know, no numbers, hasn't even delivered cars yet. It's all a moonshot and speculation. So it's understandable why it would get hit like this and why it would struggle right now and why it would have so much volatility. So me personally, I like to look at the market through the lens of my system. And when I see Tesla finally changing, like it's finally dropping out, it was in the top spot for so long, that's telling me that there might be a shift in the market happening, which means you really got to be careful when you're playing with these stocks. Like us right now, we're almost completely in cash. Our only position left is Tesla, and it's a very small position at that, and it's a legacy position. I told you, we've been holding it forever, and now we might finally be getting out of it. So it does look like things are going to be volatile going forward, especially in this EV space. And here's the thing, if you're investing in CCIV or Tesla or any electrical vehicle stock, you are likely making some big mistakes. I say that because I was making the same mistakes, and then I eventually figured it out. And once I did, I made this video right here about the 5 biggest mistakes that investors are making trading Tesla stock. Again, these things apply to any of these EV stocks. And this video is very important to watch if you want to be as profitable as possible, especially with all the volatility and the market change that we're seeing. So click this video right here and I will see you there.